Hello, everybody. Welcome to Intermediate Accounting 17th edition video solution walkthrough. Kiesel, Weingart, and Warfield. This is exercise 7-9. This textbook their authors are Don Kiesel, Jerry Weingart, and Terry Warfield. The question used in this presentation is copyright 2019 by John Wiley and Sons. All rights reserved, and this is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. This solution presentation is copyright 2019 to 2021 by Bennett Tchaikovsky. All rights are reserved, or excuse me, all rights are reserved. The opinions contained within this presentation are mine, Bennett Tchaikovsky, and not any of my employers or the authors of the textbook of Wiley. Okay. So let's go ahead and get to it. Right over here. And let's find our sheet, questions with solutions. Perfect. Okay. So we've got here computing bad debts and preparing journal entries. The trial balance before adjustment of Taylor Swift shows the following balances. Give the entry for estimated bad debts, assuming that the account allowance to provide for doubtful accounts on the basis of 4% of gross accounts receivable, and then 5% of gross accounts receivable, and the allowance for doubtful accounts has a $1,700 credit balance. Okay, so what we're going to do right over here is let's take a look. Okay. So this is my allowance for doubtful accounts. This is my accounts receivable. So if my accounts receivable is $90,000, right? And my allowance for doubtful accounts presently has a credit balance, excuse me, has a debit balance of $1,750. Okay, so the first thing we go through and do when we're doing these accounts receivable questions is we want to figure out what is the ending balance of accounts receivable. There are two different methods that are really acceptable under GAAP, right? And one of them is going to be percentage of AR, and then the other one is a percentage based on an analysis of basically percentage based on a aging of accounts receivable. The methodology with where you're going through and doing accounts receivable based on credit sales, don't do it, right? It's not going to be worth it. So it's not something that's really acceptable under GAAP. So the first thing we're going to do is we're going to figure out what is our ending balance in the allowance for doubtful accounts. What should that amount be? And for here, for part A, it's telling us that 4% of accounts receivable should be this ending balance. So what we're going to do is we're going to take 90,000 times 4%, and we're going to get 3,600. So it now becomes a math game, right? So right over here, right, X minus 1,750 equals 3,600. Right? X is going to be equal to 3,600 plus 1,750. X will be equal to 5,350. Now, if we take 5,350, we subtract 1,750, we get to 3,600. When I'm going through and preparing the adjustment to record bad debt expense, it is always the same. Right? And just remember our favorite little T account. Our favorite T account right over here is showing assets equals my liabilities plus my owner's equity, expenses, revenues, debit, credit. When I record bad debt expense, it's going to be at the end of the period or 12/31XX. I'm going to debit bad debt expense for 5,350, right? And then I'm going to credit the allowance for doubtful accounts for 5,350. Now, just so you know that when I'm crediting this account over here to balance it, right, what I'm really going over here and doing is I'm debiting bad debt expense. Okay, and I'm debiting bad debt expense for $53.50. Okay, so that's how we're going through and doing this part, letter A. Okay, so let's go overhead and now take a look at letter B. So for part B, what I now want to go through and do is now say, well, what if it's 5% and the allowance for doubtful accounts has a $1,700 credit balance? So what does that look like? So let's just go ahead and copy our friends right down here. Okay. And so we still have the same $90,000, but we're now saying that there's a credit balance of $1,700 in our allowance for doubtful accounts. So this second scenario here, it's saying 5% of accounts receivable, and there's a $1,700 credit balance. So my new number here is going to be 90,000 times 5%, or $4,500. So my adjustment now becomes for this part B is, what do I have to do to get from 1,700 to 4,500? Well, I'm going to probably need $2,800. So I'm going to credit the allowance for doubtful accounts for $2,800. I'm going to debit bad debt expense. When you're going through and doing these questions for accounts receivable, follow 4 steps. The first step is compute the ending balance and the allowance for doubtful accounts, either based on a percentage of accounts receivable or a aging, right? Here is just a percentage of accounts receivable. The second step is you want to go through and handle any types of accounts receivable write-offs, right? The way we write off a receivable is we're going to debit the allowance for doubtful accounts, credit accounts receivable. This is the write-off, right? Next one is reinstate any AR previously written off. So to go ahead and do this one, I have to reverse the curse. I debit accounts receivable, credit ADA, debit cash, and I'm going to credit accounts receivable. So if I had this type of question and there was an accounts receivable previously written off, I'd want to do that. Then the very last step is determining bad debt expense. When I go through and I'm determining bad debt expense, it's whatever I need to balance this allowance for doubtful accounts. In these questions here, this is a little bit more simple, a little bit more straightforward, right? But if you throw in this kind of stuff here, it can get really complicated really quickly, but it doesn't have to be that way. So again, follow the steps, compute the balance, do any kind of write-offs, any kind of reinstatements, and then whatever you need to do to balance your T account is going to be what you're going to be recording the bad debt expense. Anyways, thank you so much for being with me here today. Again, this is exercise 7-9, and I look forward to seeing you on the next video. And I want to again thank Wiley for allowing me to make these video presentations. So thank you, Wiley. Don't forget to like and subscribe. If you do want me to do another video, if there's something you're having trouble with from this textbook, send me a message and I'll do my very best. Have a great rest of your day, and I look forward to seeing you soon.